SoftBank's decision to sell its entire stake in Nvidia for roughly $5.83 billion is one of the most intriguing moves in the tech and investment world this year, because it tells a story far beyond just taking profits. It's a calculated repositioning of one of the most aggressive and visionary investment firms in modern history. According to reports from CNBC and SoftBank offloaded its 32.1 million shares in Nvidia, locking in massive gains after one of the most extraordinary rallies in stock market history. Nvidia's dominance in AI chips has made it one of the most valuable companies on the planet, powering nearly every large language model, cloud AI system, and generative AI application you can name, from ChatGPT to Midjourney to countless enterprise workloads. But SoftBank's sale isn't just about cashing in at the top. In my opinion, this is a strategic redeployment of capital, signaling that SoftBank believes the next big opportunity in AI isn't in the hardware that's already priced for perfection, but in the ecosystem being built around it. The sale comes as SoftBank is doubling down on its renewed AI focus, with major commitments towards startups, building foundation models, robotics, and infrastructure projects like the ambitious Stargate AI supercomputer venture with Oracle. Essentially, SoftBank is saying the time to make money on chips has passed. The next wave of profit will come from what those chips enable. To understand why this is significant, we have to remember who SoftBank is and how it operates. Masayoshi Son, SoftBank's founder and CEO, has long viewed himself not merely as an investor, but as a technological visionary funding the future. His vision fund made some of the largest tech bets ever placed, investing billions in companies like Uber, DoorDash, WeWork, and Arm. Some of those bets were spectacular successes. Others, like WeWork, were cautionary tales about how fast ambition can overrun reality. In recent years, SoftBank's strategy has evolved. Rather than chasing consumer apps or speculative unicorns, it's now aiming to own pieces of the AI infrastructure that will define global computing for decades. Selling Nvidia gives SoftBank the liquidity to do that on its own terms. The firm reportedly wants to allocate much of the proceeds toward building or funding massive data centers, compute clusters, and next-generation AI companies' projects that require tens of billions of dollars in capital. That's why I see this sale not as a retreat, but as a signal of conviction. SoftBank wants to move upstream in the AI economy, closer to where it can have influence, rather than just holding shares in the company that sells the picks and shovels. Still, there's a more cautious interpretation here too. Nvidia's valuation has soared past the $1 trillion mark, and its stock price reflects not only dominance, but near perfection in execution. For institutional investors like SoftBank, trimming or exiting a position at those levels makes sense, purely from a risk management perspective. The AI chip market, while booming, is also becoming increasingly competitive, with AMD, Intel, and even hyperscalers like Google and Amazon developing their own in-house silicon. So SoftBank might also be hedging against an eventual slowdown or margin compression in the GPU business. In that sense, Masayoshi Son's move echoes his long-standing philosophy of selling into strength, locking in profits when the crowd is most euphoric, and using those gains to fund the next frontier. To me, this is a smart, albeit risky, pivot. The easy gains from holding Nvidia may be over, but deploying that money into early-stage AI infrastructure could yield outsized returns if SoftBank picks correctly. The key risk, of course, is timing. Selling Nvidia now might look brilliant if the AI chip market cools off, but disastrous if the next leg of the rally keeps pushing higher. It's also worth noting that this sale fits neatly into SoftBank's broader financial strategy. The company has been working to stabilize its balance sheet after the turbulence of the vision fund's ups and downs, with ARM's successful IPO giving SoftBank a valuable publicly traded asset. Again, the firm now has two levers to pull: ARM as a steady growth play and AI infrastructure as the moonshot. Masayoshi Son has been vocal about his dream of building an AI revolution. comparable to the dawn of the Internet 1, where Softbank isn't just a participant but a core architect. The $5.8 billion freed from Nvidia shares may go toward those ambitions. According to reports, Sun wants to direct billions into building Stargate, an AI supercomputer that could rival the scale of U.S. hyperscalers like Amazon or Microsoft, potentially making Softbank a key infrastructure player in Asia's AI race. It's a breathtakingly ambitious idea, but one consistent with Sun's style. When Softbank believes in a vision, it doesn't nibble it, goes all in. However, as much as I admire Softbank's ambition, I think this move underscores a deeper theme: the transition of the AI narrative from hardware dominance to ecosystem growth. Nvidia has already captured the world's imagination, but the real challenge now is scaling compute access, building sustainable energy systems to power data centers, and deploying AI into industries that still operate mostly on human intuition. Softbank's capital could accelerate that transformation if invested wisely, but it could also disappear fast if spent recklessly on hype. Historically, Masayoshi Son's track record has been mixed. His timing is often visionary, but his execution can be erratic. WeWork and some vision fund losses remind us that not every next big thing becomes profitable, no matter how exciting it sounds. If Softbank can temper its enthusiasm with discipline backing real technological infrastructure rather than speculative narratives, this Nvidia exit could age like genius. If not, it could look like selling the world's most successful AI chip company at the start of its golden decade. In my view, the symbolism here matters as much as the dollars. Softbank's sales signals that even inside the AI gold rush, smart money is starting to think about what comes next. Nvidia may remain the dominant chip maker, but the narrative is shifting toward who can harness that computing power most efficiently, and who can build the next layer of AI-enabled platforms and services. It's no longer enough to own the picks and shovels. You have to own the mine. Softbank wants to own the mine, the land around it, and maybe even the railroad that ships the gold. Whether that grand ambition pays off would depend on how well they balance innovation, risk, and financial prudence. For now, one thing is certain: Softbank is not retreating from AI. It's betting that the next trillion-dollar winners will be the companies building the infrastructure, energy, and intelligence systems that make AI scalable, affordable, and ubiquitous. Selling Nvidia might just be the down payment on that vision.